Yes, the geopolitics, the domestic politics, it's all real good entertainment, but again, it's a distraction. And there's the old saying or writing of Shakespeare that all the world's a stage. They want you to keep watching this play here, while on the other stage, they're robbing you blind through inflation. And that's what's going to continue. Tuesday, June 24th, 2025, Maneco 64, home of alternative economics and contrarian views. Yes, the U.S. supposedly has brokered a ceasefire between Israel and Iran. Iran is denying it. They're saying they will stop their bombing if Israel stops its bombing. Well, geopolitics, of course, right now is front and center. And there's an old saying about wars that the first victim is the truth. And I think it still applies today. So with that in mind, I'm going to focus on something more concrete that really affects your bottom line, your pocketbook, and something that they don't want you to know. And what is that? Well, that the Fed is ready to inflate again, that the Fed is going to give up on trying to bring prices down to like 2%, which is already pretty bad. If you have 2% price rises over 36 years, the purchasing power of your currency halves in value. So that in of itself is not a good thing. But with all the news right now being focused on Israel and Iran and the Strait of Hormuz, the price of oil, did you know that a couple of Fed governors, they've come out recently and called for rate cuts in July. So not far away. And that's what we're going to look at today. Before I move further, just want to give a shout out to Dirty Man Safe, one of our affiliates. I've got a new landing page for their website. Yes, it's a great way to keep your valuables safe. Not everything, of course, but some of it in this day and age where things are really crazy. And if you use my link, it's below in the description, you get 10% off. And I think they also send you a special gift if you were to buy a Dirty Man Safe. So, yeah, did you also know that in the last few days, the U.S. national debt surpassed 37 trillion? Maybe you do, but maybe the general public isn't focused on that. Did you know also that the bond market is still under pressure, that the 10-year yield is still near 4.5%? Yes, it's come off a little bit, but things don't look very good. And I'm going to come to the Fed officials. But before I do, I want to talk about the CPI, because I saw this post a couple of days ago or so by Steve Hanke, professor from Johns Hopkins. And he says here, the integrity of U.S. CPI data has been thrown into doubt. In May, 30% of the prices in the CPI were mere estimates, not observed values. So there you go. The other thing that you can count on is that the government, Uncle Sam, they're going to keep lying to you about how the inflation of the money supply of credit is affecting the purchasing power of the currency. Because as you already hopefully know, CPI is not really inflation, but it's a tool for the powers that be to convince you that there is no real inflation, and we're going to come to that in a minute. So what they do, they say, look here at CPI, that's inflation. Don't look at the money supply. Don't look at what the Fed's doing. Don't look at all the liquidity they're creating. look at this bogus number. And even the bogus number is becoming more and more difficult to manipulate lower. But now they're estimating, prices of things, of how things are going up or down, which is crazy. It's also what they do with the non-farm payroll. Did you know that the jobs number is actually a survey? It's estimated. So you can bet that the CPI is going to be kept down, and that the Fed is going to keep inflating. And by inflating, of course, I mean they're going to pump the currency and credit supply. So as I said, in the last few days, it started with Waller. Waller says Fed could cut interest rates as soon as July. So Governor of the U.S. Federal Reserve, Christopher Waller. And it says here in this Bloomberg article, Federal Reserve Governor Christopher Waller said the central bank can lower interest rates as soon as next month, reiterating his view that the inflation hit from tariffs is likely to be short-lived. That's another deception there. Tariffs don't cause inflation. Yes, they might affect prices higher, but what really causes the currency to devalue is the supply of currency compared to the supply of goods. And he goes on to say, we could do this as early as July, Waller said Friday in an interview on CNBC. The Federal Open Market Committee next meets July 29 to 30 in Washington. Waller said economic data show GDP growth and inflation are running close to the central bank's targets. He also said he believes the Fed's benchmark rate is 1.25 to 2.5 percentage points above the estimated neutral level at which it would neither slow nor stimulate the economy. Yes, the neutral rate, that's another fallacy, I would say. And then yesterday, we've had another governor, and she was appointed by Trump in the beginning of this year. So it says Federal Reserve official Michelle Bowman calls for interest rate cut as soon as July. Vice Chair for Financial Supervision says Donald Trump's tariffs will have smaller effect on inflation than feared. Again, that fallacy that tariffs create inflation. The creators of inflation, if you are not aware of it, are the central banks and also the government through deficit spending. That's how inflation is created. The CPI is a consequence of inflation. It's rising prices, but they're going to justify these rate cuts now because the government is probably going to keep CPI under wraps. But even if it goes back above 3% or more, I think the Fed now is determined to inflate or die, because we know that under the present fiat currency system, if you don't keep inflating, the system implodes. And therein is the whole problem that we have right now. And that's why I try to focus on what's going on underneath the surface, financially, economically. Yes, the geopolitics, the domestic politics, it's all real good entertainment, but again, it's a distraction. And there's the old saying or writing of Shakespeare that all the world's a stage. They want you to keep watching this play here, while on the other stage, they're robbing you blind through inflation. And that's what's going to continue. And I've noticed this morning, despite this ceasefire, gold is still well above 3,300. Silver is pretty much unchanged. So what gold and silver are telling us is that investors trust the dollar and fiat currencies less and less. They expect central banks to keep inflating the system. And yes, you've been warned. And what's the warning? Well, keeping too much fiat currency reserves, if you're fortunate enough to have those in the bank or in government bonds or on deposit, longer term is a losing proposition. And that's why gold and silver have actually beaten the 60-40 portfolio for the last 25 years. Who needs a 60-40 portfolio when you have gold? Yeah, I know it's not going to be like that forever, but this is the new reality, and people are still not aware of that, and that's why this precious metals bull market is still in its infancy. So let's quickly check the markets this morning then. It's 7 a.m. London time, so not surprisingly, tensions seem to have diminished in the Middle East, but we're not sure, of course. You could be watching this in 12 hours time and things could have changed completely. This war could be back on again. We could see crazy things, right? But being as it is though, gold is right now at $33.33, down $36. The high's been 71 and the low's been 26. Silver is virtually unchanged at 36.10. The Dow futures, that's up 290. The NASDAQ 100 futures, that's up 220 points. And the S&P is back above, well, it's just above, above 6,000. It's up 46 at 60.70. That's the other thing. It feels like the Trump administration, all they care about is the stock market. They made a huge mistake back in April with this Liberation Day. Trump had his trust moment where stocks and bonds collapsed, the dollar collapsed, and he had to backtrack. But I think the freezing of the tariffs, that's up for unfreezing, I think, July 9th. It's funny, we haven't heard much about tariffs except from the Fed officials who want to start cutting, of course. And today as well, Fed Chairman Powell, he'll be testifying in Congress, so it'll be interesting to listen to what he says. Of course, he's been against cutting rates. So in the currency market, we've got the dollar weakening a little bit here. You'd think that the dollar would strengthen on the back of this brokered ceasefire by President Trump, but it doesn't seem so. Dollar's down about a third across the board. It's down a little more versus the yen. It's at 145.24, down about 2/3%. Crude oil, yeah, that's down another $4 at 65.50. So very volatile. I for some reason, don't think we've heard the last of what's going on in the Middle East. And I could very easily see oil go back above 70, but who knows? And as I said earlier, keep an eye on the bond market. That's really key here. We're at 433 in the 10-year, and that's a really key level. Actually, you might think that's weird. Well, it's because it was a key level a few years ago. At one point, yields were going up, and they topped at 433, and that's been kind of a support resistance for the last 3 years or so. So keep an eye on that. And with that, I'm going to wish you all a very good day. Take care. Bye.